Hi, everybody. Welcome back to Ox Talks. It is Friday, March 15, 2024. Hope you're having a productive day today. You know, we talk about on Friday's show now that the weekends are an opportunity. Those of us that don't have to work on the weekends, many do. But for those that have some extra time, it is a fantastic opportunity to work on your preparedness plan. And I mean across the board. And you have to break it up into categories and go through this stuff. If you're just starting out, you have to start small. If you have, an entire, room of stuff, you have to make sure that you're organized. A lot of this is being organized, knowing how to access things, knowing that you're not using items for the first time in the event of an emergency means take these things out of the boxes, guys. If you have a solar system, if you have certain methods of cooking that you haven't used or practiced with, it's important that we implement these things prior to something happening, because in a panic or a situation where there's say an immediate and sudden and stressful change in our lives, it's going to be harder, more difficult to put these things into practice. So, security, obviously you need to be constantly working on your security, not only your security for your home, but also your personal security for you and your family, and be proficient with those tools. It's a great time to get up and spend a couple hours at the range and work on those things. Very important. Look at where you're at with your food supplies. Maybe it's a good opportunity to go down to one of your big box stores, pick up some more cans of food. That's not the end all be all. You can't have a couple of cans of beans, in the pantry and think that is going to solve your problem. It's not. But you have to start somewhere. So I maybe use the weekend as a chance to do these things. I've been focusing on Saturdays, or at least part of the day, to spend on preps and organization. With that being said, thank you for watching these videos. Been really overwhelming response the last few days. I very much appreciate it, especially to the new subscribers and all my subscribers that have been with me for the last 5 months. It means a lot to me. We just crossed over 6,000 subscribers, I think, this morning. So let's keep going. Let's march on and just getting warmed up here. So thank all of you. Please subscribe if you haven't subscribed. Continue to hit the like button and the bell notification. With that being said, I have a few stories I want to share with you today. They all deal with the economy. They all deal with the dire situation of the U.S. consumer. And yes, sometimes I know I sound like a broken record out here, but as these stories continue to land before me, I will pluck them out, the ones I believe are important, and share them with you. Briefly, the stock markets sold off again today. Follow on from yesterday's sell-off. We'll have to keep an eye on this. Is this the beginning of a weakening? Is the bubble coming out of the balloon, so to speak, or is it just a temporary pullback? I am not a market guy personally. A lot of friends that are market gurus, and they're always going to tell you that this is just a natural small little pullback, and it's a perfect opportunity to buy, to continue to load up on shares. So leave your comment below if you're a market person what this means. Cryptos have been getting hit, beat up the last few days as well. Gold took a few dollars off today. Silver had a great day. If you're a silver lover like I am, silver's looking pretty good right now in terms of where it's heading. Not financial advice. So the first article is from Business Insider, posted late yesterday. It says recession odds are very high as economy looks poised to see an unemployment wave and plunging consumer spending, chief economist says that's according to Joe Lavorgna, the chief economist of SMBC Nikko Securities, who's among the few on Wall Street still sounding the alarm that the risk of a coming recession is here, and it's growing by the day. Recession indicators that have predicted previous downturns, it says, have already flashed a warning. The Conference Board's leading economic index suggests there'll be a near to zero GDP growth over the second and third quarters, the group in a recent statement said. The closely watched 2- and 10-year Treasury bonds, the yield curve also remains severely inverted, while bank lending that has also contracted in recent months. So we have a lot of things developing across many financial sectors that are all pointing, according to this economist, to a recession. And look, many of us believe that we're already in a recession. The question is, how bad can this get? So all three of those metrics are still flashing recession, Lavordna says. And I want to talk about an interesting metric here that this guy brings up that I haven't seen covered before. I haven't shared on this channel. But that's the fact that if the Fed continues to keep rates where they're at and doesn't do a substantial pivot with rate cutting, this is going to have a substantial ongoing effect on the housing market. And what this guy says is construction sector is right now, given the circumstances, overemployed by roughly 1 million workers. The impact, he says, of construction layoffs alone could push the overall unemployment rate up by 60 to 70 basis points, he predicts. If rates don't come down very dramatically, he says, very quickly, my guess is that we're going to lose a significant amount of construction employment. It is possible the Fed cuts rates very dramatically, yes, but that's only going to happen, or most likely going to happen, he says, listen to this, if there is a recession. We've discussed this before on this show. Over history, the Fed has only cut when we're already in a recession and things are already crashing. So don't expect them to front run the situation. They're going to wait until everything, the bottom's dropping out of everything, before they come in and do anything relative to rate cuts, from my perspective. So if you look at what they've done in the past. So if you are in the construction industry and this guy is saying, look, at 1 million construction jobs could be lost, please consider having a backup plan. I'm not saying this is totally accurate. I'm reading a story. But it's an element I haven't covered before or heard before. And that would be a big decline in the construction industry in this country. So construction workers, think about starting your own side gig. Think about finding a way to generate some income aside from your 9-to-5 construction job and see how this plays out, because it could happen very, very quickly. The next article I want to share with you is from Fortune, and this is also late in the day yesterday. And it says the economy was just hit with a 1-2 punch of bad data. We covered the data individually on the last few shows, but I thought this article kind of summarized some key points to drive the point, if you will, without being redundant, to drive the point home. It says the mighty American consumer has shrugged off months, even years of recession predictions from top economists and Wall Street CEOs. Facing the highest inflation in 40 years and aggressive interest rate hikes meant to tame that inflation, consumers have managed to continue spending, enabling the economy to remain on solid footing. But this week, a 1-2 punch of bad economic data has some experts waiting for, says, another uppercut. The second straight week retail sales report, which included a downward revision of January sales data, has sparked concerns that consumers are finally showing signs of wear and tear after powering through price increases and rising borrowing costs for roughly 2 years. I'm going to show the last article today. We'll talk about the consumer is not just starting to have problems. The consumer has cracked. The consumer is overburdened with debt. We'll cover that in the last story. It says, while last month's retail sales miss was chalked up to weather, this month's weakness suggests that perhaps the consumer is not as healthy as expected. And again, it's not perhaps. Anybody who's paying attention to this stuff and what's really happening with the consumer, credit card debt at all-time highs, auto loan debt all-time highs, delinquencies rising, obviously either has their head in the sand or is doing their best to, let's say, divert attention away from the reality so that you and I do not catch on to this, to keep the masses, let's say, uninformed. And that is the goal. It's the goal that you don't have this information, that you can't make educated decisions on what's actually happening in this economy. At the same time, producer price inflation, which tends to lead consumer price inflation, also came in above Wall Street's expectations for the second straight month. So we have retail sales falling. We have producer price inflation rising. It says after being touched up by producer price index jab, the economy was hit with a serious right cross from a weaker than expected retail sales report. Okay, we talked about that. Retail sales rose just 0.6% month over month and 1.5% from a year ago in February, the Census Bureau reported Thursday. That's compared to economists' consensus forecast for a 0.8% monthly rise in sales. Even with rising gas prices and car dealership incentives driving more spending, the data shows consumers are beginning to rein in their budgets. So let me share with you the reality of the consumer. We all know what's going on. We're all paying attention to this stuff. By the way, please share these videos with everybody as far and wide as you can. Plaster all over your social media. Share it with family, friends, coworkers, and colleagues so that people can continue to hear this real information. This last article on the Zero Hedge just came out in the last half an hour. I saw it before I was about to hit record on the camera, so I quickly printed it up and highlighted some key portions. The title of the article from Zero Hedge today says, quote, "I can't even save. Americans are getting absolutely crushed under enormous debt load." So they have articles like this Fortune article and the Business Insider come out and say, well, maybe the consumers are starting to show some weakness, is a bunch of baloney. The article says Americans are being absolutely crushed by inflation and, of course, crippling debt. The signs are obvious. Last week we noted the bank's charge-offs are accelerating and are now above pre-pandemic levels. And leading the increase are credit card loans and delinquencies that haven't been this high since the third quarter of 2011. Again, we're going back 13 years to a point where credit card charge-off levels were this high. And that was coming out of the great financial crisis, or on the tail end of it. So on top of that, while credit cards and non-farm, non-residential commercial real estate loans drove the quarterly increase in the non-current rate, residential mortgages drove the quarterly increase in the share of loans 30 to 89 days past due. It says 2 years after the Federal Reserve began hiking interest rates to tame prices, delinquency rates on credit cards and auto loans are the highest in more than a decade. For the first time on record, interest payments on those and other non-mortgage debts are as big as financial burden for U.S. households as mortgage interest payments. So they're paying as much to service their credit cards and their auto loans as for their home. In short, the debt burden has made life a constant struggle throughout America. And I'll read the quote, which gave the title of the article. It's a quote. It says, "I'm making the most money I've ever made. I'm still living paycheck to paycheck," 40-year-old Denver resident Nikki Camino told Bloomberg. She's carrying a monthly mortgage of $1,650 and has $4,000 in credit card debt following a 2020 divorce. Says she can't even save. There's this wild disconnect, and we talk about this all the time. What Main Street and mainstream, the divergence, and what the mainstream media and Wall Street and all the economists is putting out there for all the masses to suck up is not really accurate in terms of how it's the impacts that are being felt on Main Street and with all of us in our local communities. Says there's a wild disconnect between what people are experiencing and what economists are experiencing, or at least what economists are saying is being experienced. Says what's more, according to Wells Fargo, families have taken on debt at a comparatively fast rate, no doubt to sustain the same lifestyle as low rates and pandemic-era stimmies provided, which we know that's long gone. Meanwhile, the increased debt load is exacerbated by credit card interest rates that have climbed to a record 22%. And of course, we know the lowest earners have the largest amount of credit card delinquencies. The people that least should be using their credit cards are the ones being forced to jack up their credit cards to buy basic necessities, food, to to pay insurance, to put gas in the car. Now, there are a lot of people that abuse those credit cards. We've discussed it before. That is a problem in this country. But there's also a large segment of people that literally are reaching for any options they have. We discussed yesterday how people are tapping into their 401ks and taking emergency withdrawals from their 401ks to make their house payments to prevent their houses from being sold at foreclosure. It says many consumers are levered to the hilt, maxed out on debt, and barely keeping their heads above water. Alan Schweitzer, a portfolio manager at credit-focused investment firm Beach Point Capital Management, told Bloomberg, they can dog paddle if you will, but any uptick in unemployment or worsening of the economy could drive a pretty significant spike in defaults. And look, we're going to have a uptick in unemployment. We're going to have a continued wave of defaults, and that is going to be the end result. So please do your best to fortify your situation. Please consider having a backup plan to generate revenues. Try to come up with a plan to pay down credit card debt if you're carrying credit card debt. And to the extent that you possibly can, stop piling up those credit cards at 22% interest. I'm going long today. I just wanted to get all that information out to you because these are things that we need to be thinking about, especially going into a weekend when sometimes the news cycle things are a little bit spotty. It's not necessarily happy, and as Jeremiah says, puffy clouds and rainbows and unicorns, but it's what's happening, folks, and we need to understand it and accept the reality. We need to accept the reality, but we can work from our own personal perspective to avoid the worst of this if we're smart. But you have to have knowledge to be able to make good decisions. Months ago, I talked about a friend of mine, a client of mine, who had a $106,000 wire transfer removed from his account. It was a B of A account, and Chase Bank took the wire out. It was a wire that had cleared. After several months, numerous months, that has been resolved. But the issue, I looked at it today. I actually have the letter that he received from his Bank of America explaining what had happened and what it was, what Chase Bank used. And Chase Bank used it. They called something a hold harmless claim. I started to research that, and it's a rabbit hole I have to go down further. But I'm going to come back and do a show on this, educate you as to this so you can be aware of it, that maybe wires transfers are not as sacrosanct as we all thought they were. I was going to deal with it today, but I just didn't have enough time to pull it all up. And again, it is complicated, and it has something to do with the National Automated Clearinghouse Association, the NACHA, operating rules and what they can and cannot do. And I think that we're all going to have a very, very eye-opening lesson when I dig into this further. I'll do that. I'm leaving here in a little bit to go get my workout today. Please, all of you, get some exercise in. Stay healthy. Eat right. Get some cardio done. Do your push-ups and sit-ups. Stay hydrated. And watch the eating. Calories in, calories out. Please be smart, especially over the weekend. It's easy for all of us to fall into that. Oh, we're around the house more. Let's go grab, an unhealthy snack or some cookies or whatever. Be careful with that. You can take, one step forward and 2 steps backward very, very easily when it comes to diet and exercise. Stay vigilant. Have a great weekend. I should be able to do a video hopefully tomorrow or Sunday. Talk to you soon. Bye.